Yes. Hi. Hi. Hi.
Hi,
Hello.
sir.
Hi, Divam.
Hi.
Yes. Hey, Riaz Gan Bashir. Okay. Right. So, Divam, I'll keep it in Malayalam for some time and then I'll hand it
No
over.
worries. No worries.
Sure. Awesome. Right. Yes. Hi. ആരൊക്കെയുണ്ട്? ആശ കൈലാസ് ഉണ്ടല്ലോ. ആദർശ് തോമസ്, അനൂപ് എസ് പ്രഭു, ലാലുമോൻ, അബി ഏതാ? അഭിരാജാണോ? ദേജാസ് അപ്പ അടിപൊളി. എന്തൊക്കെ? രഞ്ജിത്ത് വാമനൻ, നൈസ്. അബ്ദുൽ നാസർ എം പി, ബെനിറ്റോ തോമസ്, ശ്രീറാം, ഹേ, ജിതേഷ് കുമാർ. കാണുന്നവരെയാണ് കേട്ടോ മോസ്റ്റ്ലി വിളിക്കുന്നത്. പിന്നെ കുറച്ച് കമന്റ്സ് ഇവിടെ കാണുന്നുണ്ട്. യെസ് നൈസ്. റൈറ്റ്. അപ്പൊ സമയക്കുറവുണ്ട്. പുറത്തുനിന്ന് നമുക്ക് ഗസ്റ്റ് ഒക്കെ ഉണ്ട്, വേറെ സ്പീക്കേഴ്സ് ഉണ്ട്. അപ്പൊ അതുകൊണ്ട് ഞാൻ അധികം സംസാരിക്കുന്നില്ല. റൈറ്റ്. അപ്പോ അജണ്ട എന്താ? ആരോ ചോദിക്കുന്നതായിരുന്നു മുകളിൽ എന്താ സംഭവം എന്ന്. അഖിൽ രാമചന്ദ്രൻ ചോദിക്കുന്നുണ്ട് എന്താ സംഭവം. റൈറ്റ്. വൈശാഖിയമ്മ പറയും ലെറ്റ് സ്റ്റാർട്ട്. സോ ഡെഫിനറ്റ്ലി ലെറ്റ് സ്റ്റാർട്ട്. സോ പ്ലെഡ്ജ് തൻസീൽ, ഹേ. അപ്പൊ പ്ലെഡ്ജ് ചെയ്തിട്ട് ഓപ്ഷൻസ് ബേസിൽ അശക്തം. റൈറ്റ്. റൈറ്റ്. അപ്പൊ പ്ലെഡ്ജ് ചെയ്തിട്ട് ആ ഒരു ക്യാപിറ്റലിൽ ഓപ്ഷൻ സെല്ല് ചെയ്യണം എന്നുള്ളത് ഡെഫിനറ്റ്ലി അങ്ങനെയാണ് ചെയ്യേണ്ടത് എന്നുള്ളതും അതാണ് ചെയ്യേണ്ടത് നമ്മൾ പലപ്പോഴായിട്ട് ഡിസ്കസ് ചെയ്തിട്ടുള്ളതാണ്. പക്ഷെ പലപ്പോഴും നമ്മുടെ ഇടയിൽ അത് എന്താ പറയാ കാര്യമായിട്ട് അഡ്രസ്സ് ചെയ്തിട്ടില്ല. അപ്പൊ മോസ്റ്റ്ലി വിഷയം എന്താന്ന് പറഞ്ഞാല് എന്തിൽ പ്ലെഡ്ജ് ചെയ്യണം എന്നുള്ള ഒരു മേജർ ഡൗട്ട് ഉണ്ടായിരുന്നു. ഇപ്പൊ പലരും നമ്മൾ യൂട്യൂബിലും ഒക്കെ നോക്കുകയാണെങ്കിൽ കൂടുതലും ഭാരത് ബോൺസ് പ്ലെഡ്ജ് ചെയ്യലുണ്ട്. അപ്പൊ വളരെ കുറച്ച് ഹെയർ കട്ട് ഉള്ളൂ, വളരെ സ്റ്റേബിൾ ആണ്. അപ്പൊ അങ്ങനെ കുറെ ഗുണങ്ങളുണ്ട്. പലരും ഭാരത് ബോൺസ് ചെയ്യലുണ്ട്. പിന്നെന്താ, പലരും ലോങ് ടേം സ്റ്റോക്ക് പോർട്ട്ഫോളിയോ ഉണ്ടെങ്കിൽ അത് പ്ലെഡ്ജ് ചെയ്യുന്നവരുണ്ട്. പക്ഷെ ഹൈ ഹെയർ കട്ട് ആണ്. അപ്പൊ ഇതിന്റെ ബേസിക് ടേംസ് അറിയാത്തവരുണ്ടെങ്കിൽ അതെല്ലാം ഇന്നത്തെ സെഷനിൽ പറയുന്നുണ്ട്. അപ്പൊ പോയിന്റ് ബീങ്, അപ്പൊ പ്ലെഡ്ജ് എന്താണ്, പ്ലെഡ്ജ് ചെയ്യേണ്ട ആവശ്യം എന്താന്ന് പറഞ്ഞാൽ നമ്മളിപ്പോ കാശ് ഉപയോഗിച്ചാണല്ലോ ഓപ്ഷൻ സെല്ല് ചെയ്യേണ്ടത്. അപ്പൊ ഇനി കാശ് ഉപയോഗിച്ച് ഓപ്ഷൻ സെല്ല് ചെയ്യേണ്ട, ആ കാശ് എടുത്തിട്ട് നമ്മളൊരു അസറ്റിൽ, ഇതാ അബി സുകുമാർ ലിക്വിഡ് ബീസിൽ ഇടുന്നു എന്ന് പറയുന്നു. ശിവഗംഗ ശ്യാം, യെസ്, മീറ്റിംഗ് റെക്കോർഡിംഗ് അവൈലബിൾ ആണ്. അപ്പൊ നമ്മൾ ചെയ്യാൻ പോകുന്നത്, ഇപ്പൊ നിങ്ങൾ ചെയ്യുന്ന 10 ലക്ഷം രൂപ ക്യാപിറ്റലിലാണ് ചെയ്യുന്നതെങ്കിൽ ആ 10 ലക്ഷം രൂപ നമ്മൾ ഒരു അസറ്റിൽ കൊണ്ട് ഇൻവെസ്റ്റ് ചെയ്യും. ആ അസറ്റ് എന്താണെന്നാണ് നമ്മൾ ഡിസ്കസ് ചെയ്യാൻ പോകുന്നത്. അതെന്തുമാകാം, സ്റ്റോക്ക് ആകാം, ബോണ്ട് ആകാം, ETF ആകാം, എന്തുമാകാം. റൈറ്റ്. അപ്പൊ എന്നിട്ട് 10 ലക്ഷം അതിലിട്ടു. എന്നിട്ട് അതിനെ നമ്മൾ പ്ലെഡ്ജ് ചെയ്യും ബ്രോക്കറിന്റെ അടുത്ത്. എന്നിട്ട് ആ പ്ലെഡ്ജ് ചെയ്യുമ്പോൾ നമുക്ക് മാർജിൻ കിട്ടും. എത്ര കിട്ടും? സേ ഒരു 9 ലക്ഷം കിട്ടി വിചാരിച്ചു. എന്നിട്ട് ആ 9 ലക്ഷം രൂപക്ക് നമ്മൾ ഓപ്ഷൻ സെല് ചെയ്യും. അപ്പൊ 9 ലക്ഷം രൂപക്ക് ഓപ്ഷൻ സെല്ലിങ്ങിന്റെ റിട്ടേൺസ് നമുക്ക് കിട്ടും. 10 ലക്ഷം ഇൻവെസ്റ്റ് ചെയ്ത അസറ്റ് എന്താണോ ആ അസറ്റ് ഗ്രോ ആകുമ്പോൾ അതിന്റെ റിട്ടേൺസും കിട്ടും. അപ്പൊ വെർച്വലി ഫ്രീ മണി കൊണ്ടാണ് നമ്മൾ റിട്ടേൺസ് ഉണ്ടാക്കുന്നത്, അല്ലെ? അങ്ങനെ ആലോചിക്കാൻ പറ്റുന്നതാണല്ലോ. അപ്പൊ അതാണ് പോയിന്റ്. അപ്പൊ പ്ലെഡ്ജ് ചെയ്യുന്നത് തീർച്ചയായിട്ടും ഇമ്പോർട്ടന്റ് ആയിട്ടുള്ള കാര്യമാണ്. പിന്നെ നമ്മൾ സീറോദയിൽ ചെയ്യാൻ പറ്റുന്നില്ല, അല്ലെങ്കിൽ സീറോദയിൽ ഓപ്ഷൻ സെല്ലിംഗേ ചെയ്യാൻ പറ്റുന്ന ലാർജർ ഇഷ്യൂ എന്തായാലും ഉണ്ടായിരുന്നു. അപ്പൊ റൈറ്റ്. അപ്പൊ നമ്മൾ എന്തായാലും റെക്കോർഡിംഗ് ഉണ്ടോ, തിയേറ്ററിലാണ് അന്നത്തെ മൂവി, അത് മൂവിയാ ആണോ? റെക്കോർഡിംഗ് ഉണ്ട്, എന്തായാലും റെക്കോർഡിംഗ് ഉണ്ട്. റൈറ്റ്. അപ്പൊ പറഞ്ഞു വന്നത്, അപ്പൊ നമ്മൾ ചോദ്യം എന്തായിരുന്നു, എന്തുകൊണ്ടാണ് ഇത്ര നാൾ പ്ലെഡ്ജ് ഇതിൽ ചെയ്യണം എന്ന് വലിയൊരു ഡൗട്ട് ഉണ്ടായിരുന്നു. അപ്പോ ലിക്വിഡ് ബീസ് പലരും ചെയ്യുന്ന കണ്ടിട്ടുണ്ട്. വളരെ എന്താ, അങ്ങനെ കുറച്ച് മ്യൂച്വൽ ഫണ്ട്സ് ചെയ്യുന്നവരെ കണ്ടിട്ടുണ്ട്. ഭാരത് ബോണ്ട് വളരെയധികം പോപ്പുലർ ആണ്. അപ്പൊ ഭാരത് ബോണ്ട് നമ്മളും ആക്ച്വലി ആദ്യം വിചാരിച്ചത് ഭാരത് ബോണ്ട് ചെയ്യാം എന്നുള്ളതാണ്. പക്ഷെ ഭാരത് ബോണ്ടിൽ ചെയ്യുമ്പോൾ റിട്ടേൺസ് വളരെ കുറവാണ്. 5-6%, 5 to 6% മാത്രം കിട്ടുന്നുള്ളൂ, അതിൽ ഗ്രോത്ത് കിട്ടുന്നുള്ളൂ. പക്ഷെ സ്റ്റേബിൾ ആണ്. അപ്പൊ പ്ലെഡ്ജ് ചെയ്യേണ്ട അസറ്റിന്റെ വാല്യൂസ് എന്ന് പറയുന്നത് അതിന് മോശമല്ലാത്ത റിട്ടേൺസ് തരാൻ പറ്റണം. നമ്മൾ 15%, 20% പറയുന്നില്ല. എന്നാൽ 5 ഒക്കെ എന്താണോ, ഇൻഫ്ലേഷനെ പോലും ബീറ്റ് ചെയ്യുന്നില്ല. റൈറ്റ്. അപ്പോൾ ഒരു 6ന്റെ മുകളിലോ 7ന്റെ മുകളിലെങ്കിലും റിട്ടേൺസ് കിട്ടണം. റൈറ്റ്. അതൊന്ന് 6ഓ 7% മുകളിൽ റിട്ടേൺസ് കിട്ടണം. എന്നാൽ ഡ്രോ ഡൗൺ ഉണ്ടാകാൻ പാടില്ല. അല്ലെങ്കിൽ നമ്മൾ മ്യൂച്വൽ ഫണ്ടിൽ കൊണ്ട് വിട്ടാൽ പോലെ, മ്യൂച്വൽ ഫണ്ട് 92% അല്ലെങ്കിൽ 8% ഹെയർ കട്ടുള്ള മ്യൂച്വൽ ഫണ്ട് ഉണ്ട്. പക്ഷേ മാർക്കറ്റ് പെട്ടെന്ന് ഒരു 50% ക്രാഷ് വന്നാൽ മ്യൂച്വൽ ഫണ്ടും അതേപോലെ 50% വീഴും. അപ്പൊ നമ്മുടെ ട്രേഡിംഗ് ക്യാപിറ്റൽ പെട്ടെന്ന് കുറഞ്ഞു. അപ്പോൾ റിട്ടേൺസ് മോശമല്ലാത്ത ഒരു 6 to 7% ഉണ്ടാവണം. ഭാരത് ബോണ്ട് എല്ലാവരും പ്രിഫർ ചെയ്യുന്നത് എന്താ, മാർക്കറ്റ് എത്ര ഇടിഞ്ഞാലും അതിനൊന്നും സംഭവിക്കില്ല. അപ്പൊ നമ്മുടെ ട്രേഡിംഗ് ക്യാപിറ്റൽ കുറയില്ല. അപ്പൊ ഡ്രോ ഡൗൺ കുറവുള്ള ഒരു സാധനമായിരിക്കണം, റിട്ടേൺസ് കൂടുതലുള്ള സാധനമായിരിക്കണം, ലിക്വിഡ് ആയിട്ടുള്ള സാധനമായിരിക്കണം. അങ്ങനെ കുറെ കൺസിഡറേഷൻസ് ഉണ്ട്. അപ്പൊ ഇതുകൊണ്ടാണ് പലപ്പോഴും എല്ലാവരും ഭാരത് ബോണ്ട് കൺസിഡർ ചെയ്യുന്നത്. പക്ഷെ അതിന് അവിടെ എന്താ, യെസ്, ഡ്രോ ഡൗൺ ഇല്ല, മനോഹരമാണ്, പക്ഷെ റിട്ടേൺസും കുറവാണ്, ഇൻഫ്ലേഷനെ പോലും ബീറ്റ് ചെയ്യുന്നില്ല. അപ്പൊ അതുകൊണ്ടാണ് പലപ്പോഴും അതിനെപ്പറ്റി നമ്മൾ സംസാരിക്കുന്നത്. അപ്പൊ അവിടെയാണ് നമ്മൾ, വിപിനെ നിങ്ങൾക്ക് എല്ലാവർക്കും പരിചയമുണ്ട്. വിപിൻ ഗ്രീൻ പോർട്ട്ഫോളിയോയുമായിട്ട് വർക്ക് ചെയ്തിട്ട് ഒരു പോർട്ട്ഫോളിയോ ഉണ്ടാക്കിയിട്ടുണ്ട്. ട്രേഡേഴ്സ് സീക്രട്ട് എന്ന് പറഞ്ഞിട്ട് മനോഹരമായ 3-4 സാധനങ്ങളെ സെലക്ട് ചെയ്തിട്ട് ഒരു പോർട്ട്ഫോളിയോ ഉണ്ടാക്കിയിട്ടുണ്ട്. ആ പോർട്ട്ഫോളിയോ ഞാൻ വളരെ പെട്ടെന്ന് പറയുകയാണെങ്കിൽ, മാർക്കറ്റ് നന്നായി പോവുകയാണെങ്കിൽ 10% മുകളിൽ തന്നെ ഇയർലി റിട്ടേൺസ് തരും. മോശമാണെങ്കിൽ പോലും മാർക്കറ്റിന്റെ മോശമാണെങ്കിൽ എന്താ പറയാ, ചോപ്പിയാണ്, സൈഡ് വേസ് ആണെങ്കിൽ പോലും ഭാരത് ബോണ്ടിനേക്കാളും ബെറ്റർ റിട്ടേൺസ് ഹിസ്റ്റോറിക്കലി തരുന്നതാണ്. ഈ മാർക്കറ്റ് പൊളിഞ്ഞാൽ പോലും വളരെ ചെറിയ ഡ്രോ ഡൗൺ ഉണ്ടാവുള്ളൂ. അങ്ങനെ വളരെ ബുദ്ധിപരമായി ഉണ്ടാക്കിയെടുത്തിരിക്കുന്ന ഒരു പോർട്ട്ഫോളിയോ ആണ്. അപ്പൊ അതിന്റെ ഫുൾ ടെക്നിക്കൽ ഡിസ്കഷൻ ഇന്ന് നടക്കും. ആർക്കെങ്കിലും ബോർ അടിക്കുമെന്ന് എനിക്ക് അറിയില്ല. അതിന്റെ ഫുൾ ബാക്ക് ടെസ്റ്റിംഗും എല്ലാ 2008 ക്രാഷിൽ 2020 ക്രാഷിൽ ഇത് എങ്ങനെ പെർഫോം ചെയ്തതിനെല്ലാം കാണിച്ചു തരുന്നുണ്ട്. അപ്പോ യെസ്, വിപിനും ഗ്രീൻ പോർട്ട്ഫോളിയോ മോസ്റ്റ്ലി ശ്രീറാമാണ് ഇതിൽ വർക്ക് ചെയ്തിരിക്കുന്നത്. ദിവം ഗ്രീൻ പോർട്ട്ഫോളിയോന്റെ മുതലാളിയാണ്, പുള്ളി ഡയറക്ട്ലി വന്നിട്ടുണ്ട്. അഗൈൻ ഗ്രീൻ പോർട്ട്ഫോളിയോ നിങ്ങൾക്ക് കുറെ പേർക്ക് അറിയാമെന്ന് വിചാരിക്കുന്നു. നമ്മുടെ ഹൈ ക്വാളിറ്റി റൈറ്റ് പ്രൈസ് സ്മോൾ കേസിലൊക്കെ ഞാൻ ഇൻവെസ്റ്റ് ചെയ്ത പോലെ നിങ്ങൾ കുറെ പേര് ഇൻവെസ്റ്റ് ചെയ്തിട്ടുണ്ട് അല്ലേ? അപ്പൊ ഹൈ ക്വാളിറ്റി റൈറ്റ് പ്രൈസ് സ്മോൾ കേസും ഒക്കെ ഇവരുടെ തന്നെയാണ്. അപ്പോ വളരെ എന്താ പറയാ, റിനോൺഡ് ആയിട്ടുള്ള വളരെ നന്നായി പെർഫോം ചെയ്യുന്ന ഒരു പോർട്ട്ഫോളിയോ മാനേജ്മെന്റും പരിപാടികളും നടക്കുന്ന ഒരു സംഭവമാണ് അല്ലെ? റൈറ്റ്. കാർത്തിക് നമ്പ്യാർ പറയുന്നത് ലോങ് പെൻഡിങ് സെഷൻ. ഐ നോ ലോങ് പെൻഡിങ് ആയത് മറ്റൊന്നും അല്ല. ഇറ്റ് ടുക്ക് എ ലോട്ട് ഓഫ് ടൈം ഫോർ ദം ടു വർക്ക് ഓൺ ദിസ് ആൻഡ് ഗെറ്റ് ദിസ് പോർട്ട്ഫോളിയോ റൈറ്റ്. That's why it took some time, right? അപ്പൊ എപ്പോഴും ചെയ്യുമ്പോൾ we always want to give you something really good. So yeah, so I'll hand it over to them. So this would nearly be a 1-hour session. So Divam would be speaking to you. After that, Sriram would be taking you through the presentation of showing you what exactly the portfolio is, what the constituents are. Yeah, we're even talking about that. What the constituents are, how you can invest into it, what will be the benefits, and why this actually is trader's secret. അത് ഞാൻ പറയുന്നത്, no trader should trade FNO or intraday without pledging into this is what I feel as of now. അത് വെറുതെ പൈസ വെച്ച് ചെയ്യേണ്ട ആവശ്യമില്ലല്ലോ. You invest your money into this, pledge it. With that money, you trade FNO. Beautiful, right? So yeah, looking forward, and Vipin will be the host of the session. So towards the end, we will also be having a Q&A where I'm sure you'll be having a plethora of questions. So we'll take all of them at the end. So yeah, welcoming you guys and also welcoming Green Portfolio to this beautiful. I'm looking forward to this anyway. So yeah, Vipin, you can take it from here.
Yes. So yeah, hi team. So good evening, everyone. I mean, first of all, I would like to thank you everyone who have joined here, and it is really appreciable that in a Saturday evening, like after Diwali, everyone might be in a holiday mood or someone might be in vacation or something, but you have taken your time out here and joined us in the Saturday evening, right? So definitely, I'm pretty sure that it will definitely gonna add value for your time. So as Sharik already given a glance about the products and details, so I think it's already we need to welcome our guest, right? So first of all, we will welcome Divam Sharma, who is the co-founder and fund manager of Green Portfolio. So hi Divam. Hi.
Hi Vipin. Thank you so much, Sharik, for this great introduction. Sriram, can we start the presentation?
Once again, I mean, I will also introduce Sriram as well, I think. I mean,
yeah, sure.
Sriram is pretty new for at least some of the family, right? So, I mean, maybe Divam, I can say a few about you as well. I mean, Divam is actually a 15 years experienced fund manager in the market, and he's also a one second. Okay, so yeah, sorry for that. Okay, so talking about Divam is actually a chartered accountant, and he's having a 15 years plus experience in the market, and he have done his MBA in ISB Hyderabad, things like that, right? And talking about Sriram is actually a research analyst over there, and he have completed his graduation in UK Business School, which is a University of one second. Once again, sorry for the inconvenience. Abdul, can you please remove the annotation?
Sriram can do it. So Sriram is presenting, right? So he can go to the floating bar, go to the right. There are options. You'll have a drop down there. You'll have turn on, turn off annotations there. Sriram, you would be able to, disable annotation for others.
Yes.
So that's done.
Okay, cool. So I think we can take it forward from here because it's already time seems to be right. Yeah, Sriram, I think you can take it forward.
Annotations still okay. Give me a second.
Maybe you did not do it right. Maybe you can try it once again.
Okay, done. Disabled.
Cool.
Okay.
Yeah.
Shall we start?
Yeah, please.
Yeah. Thank you so much, everyone. It's a pleasure to be talking to you all, and thank you so much for this great introduction. So as pointed out, we are Green Portfolio, and we are a SEBI registered portfolio manager and research analyst. So we are focused towards Indian equity markets. We are into investment advisory services, equities, and have a PMS. So in terms of our PMS, we are managing somewhere around 300 crores, and we are one of the best performing PMS in the country, delivering over 36% CAGR over the last 3.5 years. We are a team which is highly qualified. I am a chartered accountant, MBA from ISB. Our team consists of chartered accountants, CFAs, and MBA graduates from premium colleges, all passionate about markets. And we are a analyst heavy organization where most of the people that we have are focused towards research and are passionate about markets. So as you can see, we are featured on various websites and various large platforms, be it Money Control, ET, CNBC, even DD National. So we are regularly quoted on various channels for that matter. Next. So I and Anuj are the co-founders of the company. I happen to work with Kotak, Citibank, did my MBA from ISB, CA, and have 15 years of market experience. My partner Anuj Jain, who is 3 generations into investing, family of chartered accountants, all like long-term investors, made a lot of wealth from markets. He's a graduate from Delhi University and is a chartered accountant. Next. So just talking about our PMS, our flagship fund, Green Portfolio Special, where since inception, as you can see, we have delivered somewhere around 35% CAGR versus the markets which have delivered around 14.6%, which is the mid-cap index. If you across various time cycles, we have consistently delivered and outperformed the markets. So we have been disciplined. It's a multi-cap strategy, 80% correlation with our flagship high quality, right price, small case. And that's what we focus on, delivering continuous wealth creation in a disciplined manner for our investors. Next. So as you can see, the high quality, right price, the fund performance versus BSE mid-cap index, over various quarters, we have consistently outperformed the index on a regular basis. When the markets have fallen, we have also fallen, but lesser than the markets. When the markets have risen, we have also risen, but more than the markets. So like in Q3 FY19, the markets rose 5%, we rose by 18%. So the drawdown also, if you look at the Q4 of FY20, when we saw a COVID wave and the fall in the markets fell by minus 29%, and we fell by only 19%, and that too being a multi-cap strategy. So disciplined investing, diversification, risk reduction is what we focus on as a fund house. Next. So these are some of our small case offerings that we have on the platform. So we have Smart Nifty Index, small cap compounders, high dividend yielding portfolio, high quality right price, which is a multi-cap strategy currently focused towards mid caps, multinational companies, a small case, and we have recently launched the Green Portfolio ESG small case. So as you can see, the flagship 2 years CAGR was 119%, and obviously the last 1.5 years did pretty well for the market, but we outperformed the market by quite a margin and consistently. And we are amongst the top 10 performing small cases across various offerings in the small cases. Next. So the trader's secret portfolio. So while designing this small case, we were first of all, we were pretty excited when we understood the use case and we understood the requirement. So the main focus was towards reducing the drawdown and keeping a very minimal drawdown in the small case, as Sharik also pointed out while he was introducing us. So we see a lot of black swan events, especially in these type of cycles where the markets have run up quite a lot, and there could be black swan events. So we wanted to reduce the drawdown. We also did a lot of comparison amongst various asset classes and tried to figure out various correlations across various asset classes while creating this small case. The expected returns. So we wanted to create a product where the expected returns are able to beat inflation. So inflation adjusted, the return should be positive. That's what the focus of any investment is, that you have to beat inflation and you have to retain the purchasing power of your money. So this product, the expected returns are somewhere around 8 to 10% CAGR. And considering a very minimal drawdown, which we are going to talk about later. The pledge ratio. So considering the use case that this product could be used to pledge and leverage for further investments, we wanted to ensure that the haircut or the margin that you get on these investments is the highest. And we also focused on various broker specific pledge ratios on all the constituents of the portfolio. Then the liquidity. So for any investment, the liquidity is of prime importance. We ensured that the investments that we put in this portfolio are highly liquid, and the impact cost on selling the investments is the minimal. And so we have focused a lot on the liquidity of the constituents. The broker compatibility. So the product is such that it is compatible with most of the large brokers across the country. It is supported by Zerodha as well as Angel One. If you look at the amount of investment, also we wanted to keep it minimal so that each and every investor is able to get access to this investment. So the minimum investment in this product is only 2,000 rupees, and it is very SIP friendly. You can do a lump sum investment, you can do an SIP investment anytime, and the subscription fees is also kept very low for this product. Next. So continuing this discussion, the drawdown. So we have back tested this data, this small case and the constituents for like many years, almost 100 years, and we have seen that a drawdown in the worst of the scenarios has been 7.49%, which is very minimal. When you see a lot of black swan events, the drawdown goes to as high as 30%, 40%. Over here the drawdown will be very minimal. The CAGR returns will ensure consistent returns and beating inflation on a regular basis, which is somewhere around 8 to 10%. The maximum haircut that we have seen in the product is 12.5%, and that too in the worst of the scenarios. We are going to show a chart of the returns and versus the index. The gold exposure, we have also kept a gold exposure in the portfolio where there is a 10% exposure to gold, which is a positive. The investment, as I talked about, is below 2,000 rupees. The number of securities. So if you have large number of securities in the portfolio, you have to pledge multiple times, or you have to, and there's a continuous churn also. That also increases the activity of pledge. You have to go again and again and pledge. So we have tried to reduce the number of securities that are there in the portfolio. They are 5 and below. The minimal subscription fees that we have kept, the subscription fees that we have kept is very minimal, which is 0.5% of the assets under that you have invested in this portfolio. Next. So while selecting this small case portfolio, what were the factors that we keep in mind? So we look at a lot of economic conditions coming from a fund. So we are a fund. We do a lot of analysis on the macro factors. We study sectoral tailwinds to understand a lot of fundamentals on the macro side. We do a lot of analysis on credit cycles. So if on various credit cycles, the kind of investing that should be done varies. Like there were times when the credit risk funds were very scary and got very risky. and a lot of capital got allocated to Bharat bonds. So basis various credit cycles in the economy, when the economy is in expansionary mode or contractionary mode, the allocation to the assets changes. So we keep a lot of track on these things. Third is the inflationary pressure. So we wanted to keep this product which beats inflation on a consistent basis. As we are seeing currently, the inflation is rising very rapidly. We are seeing a lot of commodity prices rising quite rapidly. So the product is such that if the CPI or the consumer price index is showing an inflation of say 6 to 7%, we are going to deliver us 8 to 10%, and there'll be a cushion which you can generate through this product. We also look at the interest rate cycle, whether the interest rate cycle is on the falling trend or on the rising trend, and we wanted to ensure that the risk adjusted return from the small case is highest. We have also done a lot of quantitative analysis on back testing the data for almost 100 years and seeing the consistency of the performance of the product across various market cycles. We have also back tested it for the 2008 subprime crisis or the global financial crisis or the Asian financial crisis. So we have regularly back tested this and have found consistent outperformance and very minimal drawdown in the product. Next. So if you can see this graph, we have seen, like say in 2008, the markets have fallen all of a sudden. The product has been consistently delivering returns on a consistent basis. The drawdown in this product has not been there. If you see the fall of say 2016, there was a fall, and the markets and our portfolio did consistently well. In 2020, in March, there was a very big fall, and then also our product did pretty well. There was a small blip in our product, yes, but if you look at the fall versus the overall market fall, it was very comfortable. And this product makes more sense in these times, because if you look at current market after the 2020, the markets have risen quite significantly, and we see that when these type of the valuations are come in the market, although we see that next 5 to 10 years are great for the market, but the volatility in the market would increase, right? And when we'll see volatility, this kind of a product makes more sense, as this gives you a cushion for retaining your investments. If you are pledging it and leveraging it, it gives you a cushion that whenever there's a sharp fall in the market, you are able to retain your capital. You're not forced to sell your other investments and go out of the market, right? So when the markets have shown such a big rally, it makes more sense for launching a product like this. Next slide. So we have in this small case, we have put ETFs as constituents, as we wanted to keep minimal number of securities, as I talked about. So ETFs, as you can see, in 2015, there were 34 ETFs and mostly inclined towards gold ETFs. The AUM in 2015 was somewhere around 10 to 20,000 crores. And this AUM has consistently risen over the last 6 years. And as of today, the AUM is somewhere around 330,000 crores, and around 82 ETF products are there. These ETF products are offered by all the large asset management companies or mutual fund houses, which you would all be aware of. And this ecosystem is consistently evolving. If you look at USA, the ETF ecosystem is very much evolved. There are hundreds and thousands of ETF products which are there, and the product is completely evolved. In India also, we are seeing gradually a lot of ETFs launching. And in mutual fund, there are around 45 categories of mutual funds. In debt mutual funds, there are around 25-30 categories. In equity mutual funds, there are around 20 categories. So all these categories we will see gradually coming into the ETF trajectory, and the market gradually moving towards this. we are also seeing a lot of participation from large fund houses. Even we as a PMS have started to adopt a lot of these ETF products for diversifying our capital and keeping them in liquid funds, so that we can generate some good returns on these products and then can shift the capital to equities. So the adaptability of ETF as an ecosystem is increasing very rapidly, and this is going to grow rapidly in the future as well. So over to Sriram.
Thank you, Divam. I've been. Hi, Sharik. With all that being said, we have come down to 4 constituents. We have chosen a Nifty ETF, 1 global equities, and fixed income, as well as precious metals. Breaking up, Nifty ETF, we've chosen ICICI low vol, we've given it 20% allocation. Global equities, we've chosen the NASDAQ ETF, 10% allocation. And for fixed income, we've chosen something which is quite exotic, which is state development loans, which are given 60% allocation. And for precious metals, we have chosen gold ETF, the ICICI gold ETF, and given it a 10% allocation. Now, breaking down the constituents one by one, as Sharik mentioned earlier. Now, looking at Nippon India ETF 2026 maturity, you look at the coupon rate. Coupon rate is definitely about 8%, and the volatility during unfavorable market events or rising yields is low compared to other ETFs that we have in the market, other debt ETFs that we have in the market. And the YTM, we often talk about the Bharat bond. The YTM, the yield to maturity of SDL, is higher than Bharat bond. We'll come back to comparing with Bharat bond later, but on another line, the credit rating of the instruments in this ETF is SOV, meaning it's sovereign. State development loans are implicitly backed by the RBI. So the credit risk is near zero compared to the Bharat bond, which has a rating of AAA, which is AAA rating. Now, second constituent, the ICICI low vol. This is very exciting because this one has high concentration for FMCG stocks and IT stocks. And what these FMCG and IT stocks do when the markets fall, they do not act as much because these are non-discretionary and these are less prone to market economic cycles. And hence, and also these are actively managed, and because it's actively managed, the fund manager, the AMC, is consistently trying to create an alpha over the Nifty ETF, over the Sensex index. And the sectors, like I said, the sectors are very comfortable for us, and the stocks in this portfolio we have analyzed, and it is fundamentally strong. Now, the most exciting one, we are getting exposure to the NASDAQ 100. NASDAQ consists of the world's fastest growing companies, and even during downturns, except for the dot-com bubble, even during other downturns, the fall has been low compared to the companies which is highly prone to economic cycles, like oil companies, construction companies, real estate companies. And why is the volatility low? Because these are IT stocks, and liquidity gets pumped into these stocks because these are high growth, high cash companies. And as a key line, with this, you're getting diversification from a very boring Tamil Nadu bond to a high-flying Tesla stock. Now, a couple of backtested data. This is the most crucial part of the presentation, the backtested data. If you look at the 11-year performance, the Trader Secret portfolio has performed nearly 12% CAGR since the past 11 years. And whereas the Sensex has given, surely it's more than Trader Secret, but it's only given 16% CAGR. Now, 21-year performance. We're comparing the period from the last 21 years to the inflation in India, because what are we trying to do? We're trying to beat inflation at the end of the day. We're trying to protect our purchasing power, and compare that to the traders portfolio, the traders index. As you can see, on aggregate, the Trader Secret portfolio creates an alpha over the inflation by a significant margin. And during market downturns, you take the 2009 financial crisis, you take the 2020 COVID crisis, the drawdown has been very minimal. When in 2009, Sensex is down by 38%, your Trader Secret portfolio is only down by 5%, despite having an exposure to the NASDAQ and the Sensex. Now in FY20, what happened is at the closing of 31st March 2020, the Sensex was down for the financial year by 19%, whereas the traders' portfolio was up by 6%. This is in part thanks to gold. Now the dot-com bubble. If you look at the dot-com bubble, the traders' secret portfolio performed. The dot-com bubble spanned 2 years, and during this period, traders' portfolio was up by nearly 15%, while the Sensex was down, as you can see, by a significant margin. And similarly for the subprime mortgage crisis, yes, traders' portfolio was down in a very early single digits, and Sensex was down 50%. This is the bottom of the GFC that we saw after Lehman collapsed and before the government bailed everyone out, all the financial services companies out. And COVID crisis, in the last 21 years, this is the highest drawdown but we've seen, but this is very minimal compared to the other options or other instruments. Compared to when Sensex dropped by nearly 40%, the trader secret portfolio was only down by 7.4%. This goes on to say the market, during taking different crisis time frames, we are taking the dot-com bubble, we took the GFC, the Greek debt crisis, and the COVID crisis. The drawdown is low because of the diversification and diversification into the right asset classes at the right time. Now here's a small comparison chart that we've tracked down for the last 8 years. This is, Bibin had told me these are the instruments that are currently being used by traders for pledging. So we made a comparison chart and see how each assets perform. Now, if you look, the trader secret portfolio has delivered nearly 12% CAGR, and the gilt fund, it has given 8.5 CAGR, which is before deducting the expense ratio and other charges. Whereas the liquid Bs is delivering 5.5% CAGR. Currently, what we need to remember is liquid Bs isn't delivering 5.5% currently. It's delivering only around 2 to 3% currently at the moment. If it's ICICI liquid or the Nippon India liquid. Next slide. Now, putting all this information together. Now, when you're looking at returns or risk, you cannot view something in isolation. You need to look at the risk for the return that you're getting for a unit of risk. Now, when you compare it to the 8-year CAGR, you take the 21-year CAGR, the maximum drawdowns we've seen throughout the market cycles for the last 21 years. And then now you compare the return that you're getting for each unit of risk that you're taking, because that's at the end of the day, that's what you want to maximize. The Axis Gilt Fund, it's giving a medium Sharpe ratio of 19x, 0.19x. Sharpe ratio is what's used in the financial world for measuring the risk-adjusted returns. The higher, the better. And the Sensex is only 0.2x, and Trader Secret portfolio is 0.3x. What this means is, compared to even the Sensex or the Gilt Fund, the Trader Secret portfolio is the best portfolio when it comes to risk-adjusted returns. And this we will mention later. The average broker haircut is 2.5% higher than compared to the other instruments that's mentioned. But when you compare it with the risk-adjusted returns that you're paying for, this is very minimal. Again, drawdown, because look, drawdown is what we want to prioritize on. This is why we are heavily focused. We did batch data for the drawdown. Now, Gilt Fund, even though it's the most safest securities in India, during rising yields, the bond prices go down significantly. This is what we've seen in the subprime crisis, which is 2008, 2009. We've seen this in the Greek debt crisis, taper tantrum in 2015 and in 2016 when the government started rising rates. And also during COVID-19, we've seen, because asset classes has a strong correlation during negative market events. And Sensex, we cannot compare the drawdown to Sensex because it's significantly higher and it's non-comparable. But now we come to the Trader Secret portfolio. The drawdown during these periods have been very minimal, despite taking the fact into consideration that we have 60% exposure to fixed income. Now, what is our focus area? What is Green Portfolio doing? Our focus area is timely rebalances. like Divam discussed, we had nearly 10 or 5 ETFs back in 2015. Now we have 84, and this space is continuously growing. And when this grows, there'll be not just equity ETFs or debt ETFs. There'll be debt ETFs which are in further classes, 30 types of debt ETFs, 30 types of Bharat bonds, and different asset classes like real estate investment trust, or different metals, silver or gold exchanges opening. As more ETFs are coming into the market, more asset classes are coming into the market. Now, our duty, our work, our research is to continuously ensure that we research on this evolving space and identify the key asset classes, the right asset classes at the right time with the right weightage on a continuous basis, and rebalance accordingly. Rebalancing, we plan to rebalance on average 60% churn in a year, 60% churn a year to create that alpha. And this rebalance will be coordinated with the team so that everyone knows and is prepared for the rebalance, being in terms of the technicality with the pledging, unpledged, etc. So that the opportunity cost for the traders is very, very low. Now, liquidity. Now, if you look at historically, the liquidity has been low for ETFs, but now the instrument that we've chosen is highly liquid, and especially during rebalances, we have a coordination mechanism in place to ensure there is liquidity. And through tranches, we have split the portfolio, not just one portfolio, we have made several different portfolios so that the liquidity is there during rebalances, and the rebalances takes place in a staggered manner. Pledgeability, like I said, on average, on Zerodha and Angel Broking as well, which is the top brokers in India, the pledge, the haircut that is being deducted is 12.5% on average, and similarly is for Angel Broking. Currently with Angel Broking, we have included SDL, the ICICI Low Vol and ICICI Gold. A disclaimer.
Right. Yeah. So first of all, thank you guys. I mean, you have clearly explained all the constituents in the product, and thank you so much, Divam. You have clearly stated about the company and what you guys are doing. Okay. So before going further, so everyone who are watching, I would request you guys, if you have any questions regarding the presentation which you have given by Sriram and Divam, please post your questions on the chat box. We will try to take all the questions. Yeah. Okay. So yeah, I'm taking forward from here. So actually the product which we have received, so we can do this on the small case, right? So we have a basket which is available on the small case. Now we need to go and invest into that small case basket. So here the problem, or how we need to do the investment, and how we need to do the rebalancing, that I will explain. Okay. So yeah. So if you invested already into the product, and when the rebalancing coming, so we will be informing you before Thursday itself. So once you have finished the trading, and so you already have pledged all the investments and you are trading today, and by Thursday we will be informing you that you can do unpledging. So unpledging in the sense, you no need to do 100% of unpledging, mostly maximum of 30% of unpledged you need to do. So by Friday, you will be doing 30% of unpledging, and by Monday, you will be getting a rebalance issue from small case. As you guys already receiving from small case, you will be getting a notification from small case. You can push the rebalancing by Monday morning, say 10 o'clock or something. Right. So once the rebalancing completed, you will be getting, I mean, you might sell something and you will be buying some new ETF. Say you bought some bond ETF or Bharat bond ETF or something, you might add it, okay, which is according to the green portfolio. Okay. So once the addition has been done, which is on by Monday, it will take T+2 days to get delivered on your demat account. In the sense, by Wednesday, if you have purchased something on Monday, by Wednesday evening you will be getting the settlement, so that by Thursday morning you can go for the pledging request, and by Friday you will be getting the margin issued by the fund manager. So this is how the cycle works when you come into the pledging side. Okay, so I hope it is very clear. Okay, if any questions, please let me know on the chat. Okay, we will take one by one. Okay, so before going further, I request Sriram, if possible, can you just log into Fundfolio and just show how you can do the purchase and subscription things like that. Okay, so meanwhile, I will check the chat.
Yes, thank you, Vibin. Vibin, is my screen visible now?
Yeah, it is clear.
This is the Fundfolio microsite. If you scroll down, these are the portfolios.
So sorry, Sriram, can you? I mean, a couple of viewers will be new here. So can you go back and say start from the Fundfolio homepage itself? Then it will be better, I think.
Okay, leave Fundfolio.
Yeah.
Now, when you look at the small cases, we have the portfolios listed, the trader secret. Now we have two items. We have AUM based, which is 0.5%, and we have when you invest a minimum investment of 25 lakh, it's a one-time fixed fee of 14,750 rupees with GST. This is the current breakup, and because of this, we're able to ensure that these are into tranches, and during rebalances, we're able to mitigate the impact cost, this spillage.
Yeah. Yeah, so basically, so I hope everyone can see the portfolio here. So we have actually 4 portfolios here. So we are currently starting with Zerodha and Angel One specifically. In the sense, whoever using Zerodha or Angel, they can easily go and take the basket which is appropriate. Okay, so if you are using say Angel and you are having a capital less than say 10 lakh or something. Okay, so you can go ahead with a percentage, which is AUM based charge over there, which you can see over there, right? So whoever having say more than 25 lakhs, they can opt for one-time fee payment, which is flat fee model, which itself saying around 14,000 rupees is there. Don't get confused. It is if you have say 50 lakhs of investment or 50 lakhs of amount to take trade, you definitely need to take the flat fee so that you can reduce the cost to very minimal, right? So that's how it is. So whoever having below 25 lakhs, go for the percentage model. You can get it by 0.5 percentage, which is very least. Okay, so expense ratio, you can also look into mutual funds. They're also having an expense ratio which is not you are knowing much. I mean, it is indirectly taking from you, you may not notice or something, but here it is specifically mentioned. It is over there. Okay, so Sriram and Dilan, we have got a couple of questions here. Okay, I will take a couple of them forward. So yeah, I'll start from 1 second. I'll okay. So Ankit Modi is asking, what would be your suggestion, doing lump sum investment or SAP? So he's basically asking which mode of transactions would be better.
Okay, this is not a volatile product. This is a product which grows consistently. And SIP would be ideal, dollar cost average would be ideal if the product is volatile and you are trying to get in at the right moments, buying the dip, etc. But since it's a consistent product, even if you invest, if you invest lump sum, it's ideal. But even if you want to invest a lump sum, then SIP in is SIP friendly as well.
I would like to add to it. So as Sriram pointed out, so we have put, so there's a high allocation towards fixed income securities, which consistently give you an increase in the capital on a regular basis. And we have gold and we have low volatility equity products. So if you look at the overall product construct, it is a very low minimal drawdown, and there is a consistency of returns of 8 to 10% that you can generate. So even if you want to put a lump sum amount into this product, that is very much, this product can consume it. Liquidity wise, it is pretty much okay to put in money into this product as much as capital as you want to. And it's some, so you can put a lump sum any amount, as well as you can keep on putting money through SIPs.
So basically, it's on the convenient, right? I mean, if
Yes.
someone having lump sum, they can do directly. I mean, without looking into the market, they can add money because it's very less volatile, right? So no need to time the market much. And whoever convenient with SAP, they can definitely go ahead with SAP so that they can easily increase their AUM. I mean, I can say that people are making good amount of return. Say we are targeting for 1% a week. So someone getting good enough return, they can increase their capital of trading by use of investing the SAP route, right? Every week they can know some amount of profit they can do invest here and go for the pledging once it is accumulated good enough, right? So I'll go forward the next question. Question from Karthik. So Karthik Nambiar is asking the what is the frequency of rebalancing? I think Sriram you can just mention.
Okay. Now, Karthik, the rebalancing, why does rebalancing happen is because we want to create alpha and inflation adjusted returns on a consistent basis by changing asset weightage and sometimes changing constituents. Now, how frequent we are targeting once in 6 months on average, so that the maintenance for the trader is low.
Yeah. Okay. So and next question from Karthik itself is asking about subscription is for what period and it is flat price or percentage of investment. So I'll answer this question. I mean, it's on a small case. Subscription renewal will happen every month on month basis, but when you go for the flat fee, it is offering for the first 1 year. So if you choosing percentage wise, every month on month there will be the deduction happening from your bank account, the expense ratio which I was stated 0.5%, and I mean 5% annually. Subsequent amount will be debiting month on month basis. Okay, and when you choosing the lump sum one, which is 20 that 25 lakhs minimum investment. So if you having more than 25 lakhs, you can go for that flat fee model, which one time you can invest and it will be for the first 1 year from the date of investment. And next question, is there any higher cap of investment like the one currently having maximum of 20 lakhs? I mean, I'll answer itself. I mean, there is no higher cap. It is there. You can invest how much you wanted. We're just mentioning that if you have more than 25 lakhs, you can we are offering a lesser expense ratio over there from the green portfolio side. So you can invest on flat fee. That's it. Okay. There is no maximum cap, right, Adiban?
Yes. Yes.
Yeah. Okay. So, okay, Anup is asking, so we should pledge monthly always if we do SIP. So maybe I'll take the question. So if someone doing SIP of say 10,000 rupee every month, okay. So every month, if you doing pledging, you will be charged 30 rupees per transaction and so on. So why you want to do monthly rather than going with monthly pledging? You might do once it accumulated some amount which is no enough for your trading strategy. So if someone going with our trading strategy, they might require 30 to 40,000 rupees for taking the one lot of transactions, right? So I would say you can do pledge once it is accumulated 30,000, which can take maybe 3 months. Okay, so it depends on the trading strategy. If you are just doing an intraday trading, so someone do trading intraday also can use this margin. So if you are just taking for say 5,000 rupees, you can even consider for the pledging. So it's all depends on you how much amount you require for the trading, right? So does it make sense to invest on at the money ATH market? Angit Modi, I'm not clear about the question. Can I repeat if possible? Basil Joy is asking, is there any interest applicable against pledging? Okay, so it's again technical side. So it's depends on the broker which you use and how much margin you use. Okay, so I'll add up one point here. So someone using this investment for getting the margin, we recommend that to keep 10% in cash, rest you can go for pledging. In the sense, if you have 10 lakh rupee as a trading capital, we recommend you to invest 9 lakh into this product, and 1 lakh you can keep it in cash. We recommend that on the basis that 10 lakh, 10%, which is 1 lakh of your capital, will be there to meet the MTM swing which you may face while trading. So if you are an aggressive trader, you might require a good amount of cash in the demat account, maybe say 10-20%. So you can keep maybe 2 lakh as well. So that's all depends on your risk which you're taking into the trade. So if you are a very safe trader and you have a maximum of 5% MTM swing that you're gonna face for sure, you can keep only 5% in cash as well. That's all depends on you. But we generally recommend to keep 10-20% as cash, so that there won't be any auto square off which is happening because of the loss you may face on the trading. So basically someone pledging, if you lose money on trading and you are into a negative balance for the day, the broker can immediately auto square of the pledged security, right? So to not happen that, we need to keep some amount in cash. So that is one thing. And coming to the question, if you look into the Zerodha have a rule that you has to keep 50% in cash and 50% you can use a pledge margin for zero interest. Okay, if you using say 90% pledge margin and 10% on cash, you will be charging interest. Okay, it varies on the broker side, so you need to check the broker thing, and you can consider the interest part. Okay, so it's varies on broker, what I can say. So Zerodha, it is 50-50. You need to keep 50% in cash and 50% you can use pledge margin, so that you will be ending up with zero interest. Otherwise you can charge. But to be frank, what I personally do, my 90% of investment is pledged already. Okay, so that's into some equities and all this kind of ETF which I have already done. So I do pay interest for Zerodha, but it is very minimal, to be frank. So you guys can also look into it. Okay, and Zerodha charges for someone holding for overnight. Okay, I don't want to take much time here, so maybe we will discuss in detail in another session separately. Okay, so during the rebalance part, next question is, during rebalancing our part of fund get blocked, right? So that's a question. Sriram, would you like to say anything on that, sir, about the rebalancing? He's asking if someone have rebalancing comes, how it will work.
Yes. So we've been explained in the previous slide, there involves the technicality of pledging and unpledging. So those days have to be accounted for during the rebalance. And taking this into consideration is why we are restricting the turnover per year to 60% on average.
Yeah,
I'll add to it. So when you are rebalancing, you have to keep a sufficient margin in place. Say if we are we'll not rebalance 100% of the product at once, unless and until there's a complete shift in our complete ecosystem, and there's an asset allocation product. So we have allocated across various well diversified portfolio. So say if I am churning 10% of the portfolio and I'm taking out one ETF and adding another ETF against that, so I have to keep that 10% margin in my demat, and the broker will allow you to sell the other. If I have that 10% margin, the broker will allow you to sell that the other product and will allow you to buy the new product. So just at the time of rebalance, which we will upfront tell you, at that time you just have to keep that spare margin available so that you are able to sell and buy at that time.
Okay. Yeah. So adding to the same question, PKV is asking, you have mentioned something, churn per rebalance on the slide. So Sriram, can you explain what is churn per rebalance means?
Churn is the number of stocks that we'll change compared to the entire portfolio. So if it's 30%, out of 100%, we'll be changing only 30%. So you don't, like Divam said, you only have to unpledge those 30% without losing on the trades of that 70%, the other 70%. Yes.
Okay. Yeah. So Aditya is asking, which are the brokers available to do this? So what we have actually done, we see in the initial phase, we try to create a simple portfolio, single portfolio we try to create, but we identified that different brokers have different ETF, which is different haircut, things like that. So we are keeping for different brokers, we are keeping different basket separately for the time. Okay, but it doesn't mean that if you investing on this one, you cannot pledge on ICICI if you use it, right? So if you you can check your broker account and see what are the approved list. So you might using different kind of brokers for sure, right? So just go and check your broker and you can get their approved list. If this what are the ETF which we already discussed, if it is available, you can very well use it for the time. Okay, so from our personals, I mean from our side, we are looking to different brokers as well. So we will come update you regarding all the brokers things separately. Okay, no worries. Is there any pledging charges? Ajita is asking, is there any pledging charges? That's already mentioned. Srina, can you just explain about the expense ratio?
Expense ratio of the ETFs is very low. On a weighted basis, it's around 0.7%, the expense ratio. Yes.
Okay.
Yeah, the pledging charges, as pointed out by Vibin, are pretty minimal. On one-time basis, the broker might charge you, or probably NSDL might charge you 30 rupees, I believe, Vibin. Yes, so you pointed out that. Yeah.
Okay, so SK is asking, constituents is all the same. Constituents is all these portfolio is same. Actually it is not, right? So if you look into Zerodha, you are getting 4 ETF, right, Sridhar?
Yes. So Zero, there is 4 ETFs, and Angel One, there are 3 ETFs. One, there is NASDAQ.
Can you explain why it is so?
Yes. Now, like we mentioned earlier, the ETF space is evolving. And as these evolve, the brokers still are just planning to pledge these instruments. So currently, the NASDAQ 100 is not pledgeable on Angel One. Hence, this is why we have chosen just 3 ETFs in Angel One.
Okay.
But this space is evolving. And as this evolves, this will become more mainstream, and we expect more securities pledgeable across Upstocks or across 5paisa and other brokers.
Yeah, as I pointed out in my slide, that there were only like a few ETFs that were there in the market. Now there are 82 ETFs, and there are various categories of mutual funds that are going the ETF route and are launching new products through the ETFs. So as the ecosystem evolves, we will also keep on evolving the product and be rebalancing according to the market conditions, as well as the best proposition for investors to ensure a stable return and a low drawdown and ensure consistently beating inflation. But yeah, so this is the thing.
Okay. So that's pretty clear.
Yeah,
so
one sec, Vibin, since that question is taken, so I thought I'll just come in between. So I have another call at 5 p.m. So I'm leaving. So thank you for the session anyways. Wanted to let you know that, and thank you all for attending. I will definitely take this forward in a great manner. So do ask us more questions. We'll make sure that you all invest into this and pledge that and then sell options, right? So again, thank you, Devam and Sriram, right?
Thank you so much, Sharik.
Yeah, okay. You continue, and guys, make sure that you ask maximum questions and make the most out of the session.
Yeah.
Okay.
Thank you, sir. Okay, maybe yeah, I'm moving to the next question by Ranjit Vaman is asking, when the rebalancing happens, the next week we won't be able to use the capital for trading. So I'll answer the question. So that's what Ranjit we already mentioned. When the rebalancing comes, one point is that we are not gonna rebalance 100%, as already mentioned. Maximum of 30% rebalancing will be happening. So you can only 30% you can go for unpledged. So that 70% already there, which you can already use for trading, and 30% only getting in BTV. So as Devam already mentioned, you can even keep some amount for that, which you can adjust with the trading capital. So it won't be a much issue That's what we are seeing. So Jitesh Kumar is asking, sir, I am asking clarification on pledge fund. Can I buy options? I think it can sell do option. Okay. I do one thing. We will keep a separate session for the explaining more on the technical side separately. So maybe I don't want to waste Divam and Sriram time because they are the fund managers on that side. So we can keep a separate session for this technical side. Okay, so I will explain completely over that side. So any questions for Divam and Sriram, please repost it once again so that we will be taking immediately. Maybe we will wrap it up in next 10 minutes as the time permits, right? Okay, so any questions specifically to Divam and Sriram, please repost it because I can see many more questions over there. I'll take each one and maybe we will cover it in the separate session, technical sessions separately. Okay, so please repost all the questions for Divam and Sriram immediately. One sec, I'll take the question because I can see more than 40 questions over there, so it will be very difficult to go one by one. Okay. Okay, so Ijaz Mohammed is asking, does the portfolio in Zerodha include stocks or just ETF? So, Sriram, can you just explain why it is just ETF and why not stocks?
When you're holding ETF, you're getting access to a diversified pool of stocks, of bonds, of the precious metal. And this is why going for ETF. And ETF, one of the main criteria is that the pledge ratio has to be high. And if you look at stocks, the haircut is very high compared to the ETFs. And this is why. Devam, would you like to add on?
Yeah, so that's how. So we have only 5 constituents in the portfolio, and you can shift between the so the constituents are very less in the portfolio, and for you to pledge it is very convenient, right? We get access to a diversified portfolio using ETFs, which is very convenient for you, right? So that's why ETFs.
Okay, cool. So next question is that, say I have an FD. Would you recommending changing it to trader secret portfolio? So as it is product for pledging and all, so he's asking if it is possible for me to change his FD to this product. Will that be suggestible?
Yes, definitely it'll be suggestible. FD these days, if you look at the returns are very less. You get 4.5-5% kind of returns in FDs. Second, the liquidity, if you have a say 3 years FD or a 5 years FD, the liquidity is is not that much. In ETFs, your liquidity is very convenient. You can anytime liquidate your investments and get the capital. It can also be used as your emergency funds in case of need. Versus FD, the returns of this portfolio are quite significantly high in this trader secret portfolio. You can see 8 to 10% kind of a return in this portfolio. Versus FD, it is only 4 to 5%. So you are able to beat inflation very easily here. FD is only single allocation to banks, and over here it is diversified allocation towards gold, towards fixed income, towards low volatility Nifty stocks, towards Nasdaq stocks. So it is a very well diversified portfolio versus an FD. And even we have seen in the past cases that even FD is not safe when it comes to we've seen a few cooperative banks defaulting. So considering the overall scenario, if you are not able to beat inflation with your investment in FD, it doesn't make sense, and it makes sense to transfer to this. And it is pledgeable versus FD. You have to pledge it with the bank. Here you can pledge it, take margin anytime for a shorter period, and invest somewhere else as well.
Yeah, so pretty much explained. So Sriram, next question. How many times rebalancing has happened in last 6 or 12 months? He's asking how much rebalance will be there.
In the last 12 months, the backtested data that we considered is with rebalances. Now, with rebalances, you can expect higher returns. And Can you repeat the second part of the question?
So he's asking, I mean, I think he's asking how much rebalance he can expect in future in a year time.
On average, in the next 5 years, we're expecting 2 rebalances per year. And on year-on-year basis, we cannot say exactly 2 rebalances would happen because our objective is to create that alpha. Our objective is to beat inflation, and that will be done by changing weightages. And when we change weightages, it's essentially a rebalance.
So I think in addition to Sriram, the question should also include that when will we rebalance and what aspects will we look at while rebalancing. So we will continuously evaluate the investments on a regular basis. Being fund managers, we keep on evaluating our investments. We keep on evaluating the overall ecosystem, be it on the macro side, be it on what is the interest rate cycle, which direction is the interest rate going, how much is the inflation, how much overvalued or undervalued are the markets on a broader level. So we will keep on changing, and what are the new ETFs that are coming into picture. As new ETFs come into picture, and we see more value added products being there, having good level of liquidity, we'll keep on evaluating and upgrading the product through our research. So the idea is that the churn should be less, because that gives you more convenience, because pledging, unpledging again and again, and the idea is to reduce the drawdown and ensure that the consistency of returns are there. But as we see that the markets are evolving, as we see that that there is a need, or there is a new product which is even better for investors, we will keep on churning. So currently we are envisaging a 6 months kind of a timeline to rebalance the product.
Okay, so I think Divam, I mean, even Sriram was mentioning regarding the REITs and maybe commodity ETF and all, which can going forward we can even consider, right? So we
Yes.
are pretty much open for all the maybe better asset classes or better ETFs which is coming in future, right?
Yes. As you can see, we have included a lot of very interesting ETFs, like the Nasdaq ETF. I'm sure a lot of us would be less aware of these kind of ETFs, but they are actually a lot of value add. They are like if you talk about a Bharat Bond ETF versus our SDL ETF, which Sriram was also talked about in his presentation. The SDL is again 100% secure, just like a sovereign investment, and the yield to maturity over here is high. Right, so the product is more value add than a Bharat bond, 100% safe. The cash flows are given by the government of India, and still you are able to generate more returns. So as we see new products adding value into the ecosystem, we will keep on evaluating and making the product better.
Okay, yeah. So Ankit asking, any tax liability if you get invested into bonds. So can you explain on the tax part?
So taxes are equivalent to a normal debt fund. If so, in SDL bonds, if you are investing in a fixed income, the taxes are equivalent to what you get in an FD. It's equivalent to your slab rates.
Right. Okay, so next question is regarding the comparison part. So as we already discussed about a Bharat Bond ETF and liquid fund. So someone investing 100% into Bharat Bond ETF or someone investing 100% into liquid fund, how exactly it makes different on what are the aspects?
Sriram, I think you can also show the slide for answering this.
Yeah.
Yes. Yes, this is where we compare the results, the returns of the trader secret portfolio versus the liquid Bs. Now, liquid Bs, definitely it's non-volatile, but you're losing on the purchasing power, meaning the inflation is higher than the liquid Bs. Now, when it comes to Bharat bond, compared to our portfolio or the constituent of the portfolio, which is the SDL, you compare SDL with Bharat bond has a lower yield to maturity and a higher volatility because it's AAA. Now, compared with the SDL is sovereign rated and it has zero credit risk because it's backed by the RBI. So you need to understand how this works is the central collects the state revenues, the RBI maintains the state revenues, and before reimbursing it to the state, it is paid out to the bondholders. So
again, so to add to it, so the coupon rates of a Bharat bond would be somewhere around 6.75%, and the coupon rates of this SDL is somewhere around 8.5%. Having said that, the Bharat bond ETFs have overperformed because the interest rates went down in the last few years. Last couple of years, interest rates went down significantly. So the Bharat bonds, the bond prices had risen. So now the yield to maturity of Bharat bond is less, is very is somewhere around 5.5-6% at this point in time. Whereas the yield to maturity of SDL product is somewhere around 7.5-8%. So if you look at both are 100% secure, over the SDL, we will be able to make at least 1.5-2% more because the yield to maturity is high and the bond prices are not risen to that extent. And second, Bharat bond is only investing into RBI gilt funds and into various maturities like 10-year maturity, 20-year maturity, 30-year maturity. Over here, the portfolio is more diversified. There are around 20 states bonds, 20 papers of 20 states which are there in this product. So it is more diversified in the SDLs, right? 100% secure again, and all backed by RBI. RBI takes the money from the GST collections of the states and give to the bondholders first. So 100% safe, and you are able to generate 1.5-2% more than the Bharat bond.
Right. Okay. So adding to the same comparison question is asking about the all-weather investment which is already available in the small case. So it is looking that it is very similar, right? The all-weather investment also having some ETF which is on liquid base or something, as few equity ETF is there, few debt fund ETF is there. So it seems to be similar allocation there in all-weather investment, and our portfolio is also looking quite similar. Some similarities is there. So how you can differentiate?
So if you look at liquid Bs all-weather investing has liquid Bs, and as we pointed out, liquid Bs has somewhere around 4.5% kind of a return at this point in time. So what we are doing as a fund manager, as a dedicated research house, is that we are adding value to the product on a consistent basis. We keep on evaluating. We found that not even liquid Bs, not even Bharat bond, SDL is even 100% safe. So liquid Bs invest into short-term money market instruments, but they are not all 100% AAA. If you look at these investments, they are 100% safe into government securities. If a government can default, even entire country can default. So if we are investing 100% in government paper, and it is yielding more returns than that, right? So we as a research house, if you look at, will keep on bringing you products in this small case, which will be adding value and which will be as per the market conditions. If the market is evolving, if there are new ETFs, we'll keep on bringing those ETFs. We'll diversify it more. If you look at NASDAQ, we have added NASDAQ as a 10% allocation to this product, which gives you access to global equities and the largest of the global equity companies, be it Google, Facebook, Amazon, etc. So the product which we and we have back tested, we have generated. If you look at the back tested returns, our returns are comparatively much higher than you look at the Access Guild funds, or you look at liquid Bs, or you look at comparable products. So our overall the research that we are putting in, the evolution of the product that we are doing, this product makes more sense, is what we believe.
Okay. So SK is asking about the liquidity. So to specifically asking the questions, so someone investing into this product, so would they be worried at any point about the liquidity? So someone exiting in between, other than the rebalance and all. would
No. So these liquidity we have. So this the products that are there. One is gold. Gold is 100% liquid. Now, what these how these ETF work is that ETFs are usually mutual fund units getting listed on the stock exchange and getting traded on the stock exchange. Now, you going to a mutual fund and buying and selling a mutual fund, it takes you 1 to 2 days to invest, and you cannot pledge it, you cannot quickly flip it. Over the ETF, you can go to the exchange and you can sell these units, right? Second, there are market makers for liquidity. All the time there are market makers. Third, they are very big funds in themselves. Like, say, if an SDL product, our SDL product, it almost 2,500 crores worth of SDLs are traded on ETFs every year, right? So they are very big on liquidity. They are very big asset management companies managing a large AUM under these ETFs. So overall, the product is pretty liquid. The underlying of the ETFs are pretty liquid. If you look at the Nifty low volatility, the FMCG companies, IT companies are very liquid. If you look at Nasdaq companies are very, very liquid. Gold is again very liquid. SDL is again very liquid. So the underlying of these products are very liquid, and you can anytime go and exit as per your convenience. That is what the premise has been while we were creating this product, that we should ensure liquidity, and in case of emergency, or you can also pull out funds, right? So that is very well addressed in this product.
Okay. Cool. Okay. So next question is asking from Muhammad Nashid. He's asking how much will be the cash component allocation percentage in this portfolio. As you know, as per the NSE, 50%. Okay. So it's specifically regarding the percentage keeping cash in trading side. Okay. So Muhammad, we will separately answer for the technicalities for the pledging by Monday on the community. You can join there. Okay, so I think you got some confusion on that side. We can clearly clarify, because I guess many of the newbies will be having the doubt regarding pledging, so we will completely explaining that. No problem. And Manu Recording is asking, I'm trading with 5 lakh capital. How could I pledge? I am using Angel. Which basket is more suitable for me? How much would I invest? Do we need to pledge on a monthly basis? Okay, so I'll take up this question. So you can see that on the basket. Sriram, can you show the Angel one basket? Okay, so you can use percentage model. Manu, I mean, on the Angel one, we have a AUM based plan, which is showing that you have an expense ratio of 0.5% on your investment. Sorry, on the current value. So you can take that. You can go to the Fundfolio website, Sriram. Right. So out of 5 lakh, I can say that if you are not a very aggressive trader, if you are not gonna face more than 10% MTM swing and all, you can consider for investing even for 4.5 lakhs as well, and do take trades. You can keep 50,000 as cash, so, to meet the MTM swing and all. And if you are seems to be a bit aggressive, even you can consider for 50% of investment as well. You can keep, if you want to keep 50% in cash to meet the MTM swing, you can keep. So that, as I already explained earlier, it's purely depends on your way of trading. So I can say that easily you can go for 4 lakh of investment, and 1 lakh you can keep for cash to meet the MTM swing. Okay, so hope Manu, you can see the screen. You can see that Trader Secret Portfolio Angel one, which is stated on the last on the table. So you can subscribe that, which is showing the minimum investment of 500 rupees. So that's it. I think we have so many questions here. So I think we separately answer all of them if possible, and all the recording will be available. So I hope we can wrap it up here, and maybe going forward we are definitely say Divam and Sriram, going forward, we like to meet you guys again, because once we have introducing to this community, I'm pretty sure that there will be several questions to be not answered. Maybe after some times, I'm expecting you both of you guys again on the same platform. Then there will be more questions which you're seeing now. So I think that might be a complete Q&A or something, right? So I think that's it. I mean, thank you so much, Divam and Sriram, and thank you so much for everyone who have gathered here. And looking forward to all the investments and all the questions coming forward, right? Yeah.
Thank you so much, everyone. It's been a pleasure. Thanks, Vibin, for this great. It's a pleasure interacting with you all.
Yeah. Right. So that's it. Yeah, we are winding up here. Sriram, thank you so much. Divam, thank you so much. Okay. Thank you. Thank you, everyone. Bye. Take care.